All right, Luke, today we have another very positive topic, as this time we're not talking about losing money, we're talking about doubling or even more your money with penny stocks. I suppose 89% of the people who were watching already dropped out, and rightfully so, probably. But particularly, we're talking about the fact that literally over 98% of stocks won't do that for you. And I'm not just making that up, because Gold Discovery posted a snapshot on Twitter this week showing that only 1.8% of the junior stocks that were trading under 5 cents have made it over 10 cents this year so far. And by the looks of the list you shared, I haven't heard most of them. The vast majority of the names I really haven't heard. I don't think many people are paying attention to them. So my question really here to open it up is why am I even trying? Like, why are we even doing this show to begin with?
Yeah, it's I mean, a lot of people are attracted in this business to the success stories, which are sometimes from the absolute bottom to the absolute top. They could be 10, 20, 30 beggars. And it sounds amazing to put your sort of capital that you can bring into this business and then think about bringing that 30x. And that sounds pretty good. And when you get excited about it, you want to do it and you start looking for these things. And I think it's also, I like the idea still of doing these things, but how realistic is it, and what's the risk of investing in these things? Because you tend to look at the very small ones. The success stories often start at 5 or 10 cents or 15 cents, and then a couple of years later, you see them at $3, $4, and you think that's what I want. But I need to find a 5-cent stock to do it, and that's why when you start taking these risks, and we actually talk about it quite a bit about these small, tiny companies. So I thought let's just run some statistics and see how many of these stocks actually did run this year, and it was just 7 companies that went from below 5 cents to over 10 cents since last year, December 2023 until right now, October 2024. Just 7. And if you look at the bull market, of course, that's a bit different, but still a small percentage. And that makes I think it's an important lesson to keep in mind, that you don't always need these sub 5 cent stocks to make a return. And actually, you take a big risk by putting your money in these small things.
Is it different though? Like, would you approach a 5 cent stock differently than a 50-cent stock? And why did you pick 5 cents specifically here?
Well, this is Canadian stocks. And considering that the Canadian market has sort of it's not a rule, but it's like a culture that small companies, most of them have a level of importance in terms of share structure. They want to keep it below 100 million, sometimes 200 million. If a company has 400 million or more shares out, then it becomes really a diluted stock. So a share price is sort of a psychological thing. It also, most companies trading at 2 cents are not $100 million companies. That could happen in Australia. So then maybe, I mean, share price is certainly not everything, but if you're trading at 3, 4, 5 cents in Canada, that's not where you find the successful ones. In Australia, you could actually find a successful one below 5 cents because they start at, a tenth of a cent sometimes, and then it's a big return to go from a tenth of a cent to 5 cents. So that would be a little bit of a different list, I think. Well, at least you find way more stocks below 5 cents than in the Canadian markets. So in the end, market cap also plays a role, but almost any stock, I would say, in Canada below 5 cents is a company in trouble. Otherwise, it wouldn't be trading there.
What do you think of the argument that says something along the lines, yeah, you lose most of the time, but with 1 or 2 big wins, you end up on top anyways? And it kind of sounds like an argument you'd hear at the roulette table. So I think the argument is too shallow and dangerously seductive, if you will, for the vast majority of investors out there. And unfortunately, it's also an easy sales pitch for penny stocks. So yeah, I want to talk to you about that. What do you make of that argument?
Well, it is true, and I think it has to do with how many positions you want to have. If you have 10 positions of equal size and 8 of them fail, then 1 of them can certainly make up. And if they all have a similar risk profile, I think Eric Sprott is maybe a good example. I mean, I guess he lost a lot of money on lots. I think he lost money on most of his investments in 2021. But if just one makes it, and he's in a position to demand or expect the company to keep him in future financings, Yeah, I mean, a company like Jaguar right now in the past, Kirkland Lake, when you have a real winner, he could make 100x on a big investment. Well, for us big, for him maybe not even that big. And then he can make, 5 million, turn 5 million into 50 million and put another 50 million in, and then bring 100 million into a billion. I mean, that's not impossible for him. He has done that with Kirkland Lake. So one winner can actually make everything, solve every problem you have. But I think it still doesn't mean that you have to only bet in these sub 10-cent stocks. And I buy these things, but you have to keep in mind that most of these stocks are in trouble, don't have a lot of money in the bank. If they have money in the bank, in most cases, these companies are not very well incentivized, because if the management team is incentivized and cannot get it over 5 cents, then is there something wrong with the management team, or is there something wrong with the project? I think in most cases something is wrong at that point. A project failed and is simply not going to work. In that case, you need a management team to find something new, and in most cases they only do that if they are incentivized, and that would be by a share position that they actually paid for. So I think it's good to look at the reasons why a stock goes up and the number of positions you have. So coming back to your question, yes, I think one position can solve everything for you, or two positions out of 10. But that doesn't mean that you have to go into the most risky stocks with all your 10 positions and hope that one will work. That's just one strategy that you can apply.
Yeah. Well, that's one way of saying that you like hurting yourself, I suppose. But and that's actually maybe a point, because what about the psychological toll? I mean, like if I lose money in this case, no, if I lose money 8 out of the 10 times in your examples, even if I would make more money at the end that way than, let's say, buying the S&P or whatever, I'd probably still not feel really too good. And definitely if it's like 8 losses after each other, you don't know how that's going to happen. So maybe you literally have 8 losses after each other, and then you have one that like kind of does well, 50-70% or doubles, and then really just the last one does well. But there's a psychological toll there. Again, there's not something you can put in numbers, but it's a real thing that's also happened to me. So how do you, I know you, as far as I understand, you live off of your portfolio returns. So how do you deal with those odds?
I do not often make very big losses in positions, and that's probably because I invest quite conservatively. I do not typically make, I do not often make 10 baggers because I'm out too early, or I'm not buying the ones because of, like we discussed last week, share structures or warrants. But it keeps me out of trouble, I think. Of course, I have losing positions, but mostly positions that I still have trust in. I think about, like, how are they going to finance if everything, fails? Every drill hole will fail in a way. What if there's only bad news coming? What if, I think about all these things and the scenario, and that's why most companies are simply not, the scenario is not good enough for me to invest or speculate. I think there's only a couple of companies in the last 3 years. There were probably 5 companies or 6, 7 that went 10x or more. It's difficult to find those in advance. Then I would rather buy them after the discovery hole, or buy them after the Lundins come in, or buy them after Pierre Lassonde comes in. Of course, you pay more and you will not get a 10 bagger anymore, but three times a 3 bagger is also a 10 bagger. And finding a double or finding a 3 bagger is way easier than finding a 10 bagger. And I think the process is difficult because I had stocks that made a good return for me, but went way further than I was able to hold them. I got scared about things potentially going wrong. That the complete market could collapse. The country the company is operating in could provide problems. So I'm typically a long-term shareholder because I invest very early, but I'm not the one that stays until they sell it or until they put it in production. I think I leave. Adriatic is a good example. They made the discovery in Bosnia. At that point, I felt this is really a good moment to get in. I bought it at 30 cents or 31 cents. I never bought more stock. I just bought that position, my entry position, and I kept it probably until $2.40 or something ish. I'm not sure if it's 220 or 260, but somewhere in that region. And that was, and I think I know a lot of people who kept it another 2 or 3 years. But I was thinking, well, now it's an 8 bagger. Could it become a 20 bagger? Perhaps. but there's risk. They have to build it, they have to raise money. There's still, you always have country risk. I wasn't too afraid of Bosnia, but at that point I felt, for my 10 bag, I don't want to risk it completely. So that construction could go wrong, costs could go. There were so many risks I could think of that I couldn't control that anymore in my head. Like, there's so many things that could go wrong. I'm not gonna wait for it, and I was out too early. But I can live with those things. And this one was quite good. Sometimes I'm out even earlier, and it's painful to participate in a double and then see it go 5x, of course. But if you take those emotions away, it's good to be a bit conservative and only buy when you have a really high level of conviction. And those stocks you typically do not lose that much, which of course is a bit of dangerous to say because everybody's different. And I've been doing this for 10 years, and the last 3, 4, 5 years feel way easier because I feel I have a level of comfort in my investment strategy. I know what I do. I know what my weaknesses are. I know what works for me and what I'm not good at. So investment strategy and mindset and experience and having felt the pain before, it's all very important to do it. But I think it is important to realize 10 baggers are more difficult to find than 3 baggers or doubles.
I think penny stock and junior mining investors are the only people out there who can say something along the lines of, oh, my stock doubled and I'm feeling pain. But it is true because you're taking larger risks for hoped larger profits there. And you said something very interesting here, like 2 times a triple is a 10x. So essentially, if someone promised me, this is going to be a 10 bagger in 2 years, you just have to hold it. You do that, no brainer, right? But then if someone told you, hey, do you want a 3x? I might even be like, no, I'm in junior mining to get that 10x, right? But if you literally just found 1 3x this year and 1 3x next year, that's a 10 bagger. Although you didn't participate, I mean, you cannot stick it to your name saying, oh, I found that pre-discovery and then it went up 10 times in 3 years. So it might actually be interesting to see some data on this. I know you like running that, so maybe we do that next week or whatever, but just see how often do junior mining stocks double? How often do they triple? Because, I mean, on that same topic, if you double your money, 4 times, I suppose then you're already over 10x. Yeah, you actually 16x, right? If you double your money 4 times, yeah. If I'm trying to do math at the top of my head, so I might faint here. But so yeah, I mean it's easier. I would guess the data would show that it's easier to double your money 4 times than it is to get 1, 10, or 16x. That's a guess. I don't have that data, but it'd be good to see it. What about position sizing though, when it comes down to hitting that one big one? I mean, to actually compensate for a large amount of losses, you either need a multi bagger, not just a multi bagger, but a multi bagger. And that's not accounting for the opportunity cost, which can sometimes, account for years of waiting. And that might be another data point that we can run, is like how many years does it take on average for a stock to become a 10x for the very few that do become? So you either need a multi bagger or you need a very large position. So how do you go about position sizing?
Yeah, I think 10 baggers are very difficult to predict because it's impossible. I mean, you could say like this is a company, they're looking for a porphyry, and if they find a porphyry, it's likely a 10x. Yeah, I mean, you could argue that story for probably 1,000 companies because 1,000 companies are looking for something, and if they find it, the market cap will go 10x for sure. If a $5 million company hits out of the blue 50 meters of 5 grams gold in a new place, then the stock will go 10x, unless the management really fucks it up. But it's difficult to foresee. I mean, you don't know which company is going to do it. Even the best prospects, where you confirm, where so many things are confirmed, it's still risky on the surface because the moment you drill a hole, there's always a surprise and things are different than expected. And we are not even geologists, but geologists probably agree that even if the trenches run, even if everything runs on surface, the depth extent is not always working with you. And on the risk and the portfolio sizing, I do have a bit of data in front of me right now. Not everything that we would like to discuss, perhaps, but in the last 3 years, if you just take right now and then 3 years back, October 2021, there is about 55 companies that went between 90% up and 3x, 55 companies. And there is only 5 companies above 10x, and then still another 10 companies between 3x and 10x. So in total, about 15 companies above 3x and 55, 60 companies with a double. And that's a very specific time frame, right? We're looking at 3 years ago until now, and the companies that are still around. Some companies have been taken over, so maybe there's a couple of winners that are not in this list right now. Position sizing, I am comfortable to put big positions, for me, big positions, into companies where I can always, it's very conservative, but where I can already see, even with what they own right now, in my opinion, it should be worth double the stock price in this market. I don't need a changing gold price. I don't need a new discovery. I prefer to have that upside. So a company that is looking for these things that could 10x it. But I prefer to have something that in this situation, if the company is playing its cards well, it's going to double. I want to double without discovery. I want to double without a gold price move. And then you could argue, yeah, but why is it trading here right now? Because market sentiment, perhaps. And of course, I'm saying market sentiment. I don't need a gold price to go up 20%. But for example, I have a company, a gold company, which also has lithium and also has nickel, and is not a pure play and doesn't get full value because people don't see it as a full pure play gold. I mean, a spin out could already solve that issue, for example. It's just a random example. A bit of promotion, attracting the right investor that also considers this a double without news. I mean, there's ways to with a bit of patience to get that double based on what they have already. Maybe the country is still a bit problematic, but you believe that the country could just improve or is improving, and the market didn't. It is a very illiquid market, not super efficient. So there is sometimes a difference between the actual value that's already there. You can actually you can make a pretty strong case that the company should be worth 100 million, but is only worth a 50 million. And now I sound like a promoter, but I actually think those companies can be found, are available right now. But then you still need to wonder, is this company capable of unlocking that value that they already have, but is not in the share price, in the market cap? And ideally, this company also has some speculation in the portfolio, where they are doing good work, and with a bit of luck, a drill hole can make a big difference. I don't want to play these things that just have some value, like maybe these capital there's enough companies that have $16 million in equities on the books and are trading at 30 million. They are always trading at a discount, and maybe the discount will become smaller, but that's not the value I'm referring to. I'm referring to other types of value that I think is worth a certain amount and is not represented right now. That gives me the comfort, and ideally that company also has a bit of cash, so they don't need to raise money. I don't have to be afraid of them issuing many warrants, and that's how I often allocate my bigger positions. And sometimes it can take a year or two before finally things start moving. But it happens in the safer companies where I can, if you have $1 million, just a random number to play with, and you typically still don't want to make bets more bigger than $20,000. Yeah, those are the high risk bets that are binary. It's either right or wrong, and if it's wrong, then the stock will go down a lot. Instead, you could also apply, invest $100,000, $200,000 into something that's maybe more likely a 3-bagger, maybe not a 10-bagger. But makes you a real return, and you don't have to be afraid of going down 80% in 5 months' time, let's say. And there are enough stories, I think, where the risk is real that the stock can go down 50, 60% if there's one target, amazing target, everybody waiting for it. But if the drill hole is not going to play ball, then the thing is going to go down 50, 60%. That's not when I put my big money in, because that's too risky to me.
Look, if I had $1 million to play with, I don't know if I was going to be making videos for a living. Although
I was talking about rupees, Indian rupees.
That's fine.
Rupees.
Yeah, I don't know how much that is, but I don't. Let's see how much is that. Now you're making me interested. But so that also makes me think about. Let's see, 1, 2, 3, 1, 2, 3. Okay, Yeah, it's 11,000 euros. Yeah, then I still have to make sure to split it. This also makes me think about the shotgun approach, though. Just throw a bunch of money at 30 names you heard on Twitter or in a podcast, virtually no research, hope for the best, which I kind of think you're disproving here as we speak, is that I don't think that works. What do you think?
Well, sometimes you get lucky. I just feel you can still find 10 companies with a decent speculation, like Ramp Metals. We both own Ramp when after they made this gold, this still mysterious and not understood gold discovery, but they were looking for nickel. And I talked to them earlier this year, and I didn't buy it because I felt there was a little bit of a one-trick pony. They had a pretty good target, a nickel target that looked a little bit like the Sirius discovery in 2012. That stock went 100x in a year. And the similarities were striking, but I've seen many blobs on a map, red blobs that look similar to another red blob, and then argue that it looks like a big discovery. And I was thinking, well, even if I invest a small amount, it's 80. I felt that it was an 80 or 90% chance they would not, well, maybe even more than 90%, they would not hit something like Sirius did in 2012. And then there's nothing left, and the story is so broken that it's how can you raise money if the stock goes from 20 cents to 2 cents or 3 cents? It's very difficult to recover from it because they need more money, but you're trading at 3 cents. Everybody knows they need more money. So nobody's going to buy it up to 15 cents anymore for no reason. And that's why I didn't want to play ball with that one, even though I kind of like that target. If that target would have been in a company with 10 other targets and they would test them all, or maybe test them all with partners, prospect generators. Of course, people don't always like the joint venture approach, but at least it keeps you alive if it doesn't hit the big one. So I prefer not to just speculate on a red blob on the map, almost no matter how good the promote is, almost no matter how good the person behind it is in convincing me that it's an amazing target. If I really am so sometimes you just feel like this is amazing. I mean, this is a story, and if it works out, it's going to be big, and you feel that level of excitement, and you really want to play that bet, and I call it a bet because it's really high risk. Then I would put in a really small amount of capital, maybe 1% of the portfolio max, because it could still be enough to really make a big return. And almost always these things fail. I think I'd have never had that luck in these high risk plays. I literally think never. And I have no idea how many positions I've had over the years, but I've done 70 or 80 private placements. So in market buying, maybe I've owned 500 companies outside of that. I think in those 600 companies, and that's just a random number, but I think it could be close. I don't know. I've never seen a stock in my portfolio that by complete luck strike something or very big bet and suddenly a big discovery came out of it. I just never experienced it in my life. So why bet on these things if it never happened after 600 tries? I think you need to have a little bit more of an approach where you can actually make a return every year. You try to make a return every year, not just hope for the best. That's not enough of a strategy.
Well, so with your previous answer, I thought, oh, maybe you can be a good stock promoter, but now you're telling me that hope is not a strategy, which is a cardinal sin. So you're no longer able to be a promoter.
Right.
To be fair, though, during bull markets, the number is better, obviously. So in 2020, you've sent me here an overview. 19% of the sub 5 cent stocks more than doubled. So to over 10 cents by the time it was October. So 2020 was a good year, and a lot more. You had a higher chance of getting lucky. But I think you not getting lucky is actually part of your success. That's kind of how I look at it, because you've never had to rely on luck, and obviously relying on luck and hoping for the best is not a strategy there. So I think it's actually been good for you that you haven't gotten lucky, which sounds kind of weird to say.
Well, I mean, that's maybe too much. Of course, I had luck too. But I think that the basis behind my investment thesis was not based on drilling a very having one target. Amazing story around it. I've recently seen another promote that comes to the markets very soon. And I mean, with promote, it sounds very negative. It is actually something that people, scientists are interested, geologists are interested in how can how can it be that we find this signature, and how can it, I mean, it's in a good belt, and it's a probably worth the test, but I don't want to play that test if it's the only thing in one company. That's what I've been lucky with things where I think, for example, that there's a big land package. There's probably 5 years of exploring to be done before every target that has been found has been really tested. Then one target, failing a target or three doesn't really matter much, I think. And if you then get lucky on number 4, number 5, it's still a level of luck. You need a bit of luck every now and then. It's not a real investment where you can really almost, see a trend of 10 years of profitability increasing or whatever. Not my game, by the way, but yeah, I think it is important to not only look at the upside but also at the downside. And there are ways to play discovery without that level of risk. I mean, it could also be if it's I've got an example with me today is Hemlo Explorers. That company has been out of favor for probably 2 or 3 years. And at some point it finds a base, a 3 or 5 cent base. And now I'm going to argue why to buy such a stock. But if such a company has insider ownership and you think that the people behind it can make it work, and you call them up and you think they're not going to do a rollback anymore, or simply not going to do a rollback, and they're going to finance it, but they're looking for a new project in addition to the one project they have. And you hear a bit of a strategy how to get this 3 or 4 cent stock back into whatever 10-20 cent territory, and from there build a real business. A real business, everything is a speculation in this market in a way, but more of a business than just a bet. Then buying at 3 or 4 cents is fine, I guess. But then the team, you know what they want to do. You can actually ask them in a year from now, hey, why are you not following your own plan from a year ago? So you can actually talk to them every quarter, see if they are executing the plan they had at 3 cents. And I think you could actually put money into 3 cent stocks. I do it. But you have to have a level of a timeline that works. And if you and you don't even need a discovery for the stock to go to 15 cents. At that point, you could take some money off the table and still play the discovery. So I'm not against buying these small companies and buying these. At some point, it will become a bet because they only have 1 or 2 properties and they will drill a hole and it will have an impact on the price. At that point, I don't want to have my full capital on the table in most cases. If I already made a return, mostly I take a bit of money off the table so that you're not betting. Betting has not worked for me. Really, just putting money into one target and hoping for the best. That's not that works for me, and that's why I play it this way. I often buy, and then there's still another 1 year of boring period, and then something happens. Then they find a new project, they can recapitalize, and then things start to work slowly. So I have a long waiting time in front of the move, but then I am out, not completely out, but sometimes out partially when the move gets started. Because then people get excited, then the new PowerPoint presentation comes out, then they will be presenting at a conference, and people start to think about it, and that's when there's room for an exit, a partial exit, and that's also a sort of safe way to play it, the high risk bet, by being in the story well before others are in the story.
I do think that this goes to show everything that we've talked about so far over the last half an hour or so. It goes to show that this is a very much a bottom up market. So if you approach this top down and you're like, oh, I'm bullish on silver, therefore I'm gonna shotgun 20 names, silver names that are kind of well promoted. Or someone on Twitter told me about it. Oftentimes, obviously, there's biases that are not well disclosed and stuff like that, and in podcasts and so on and so forth. So you just do that, not knowing what's happening. You take your decisions mostly based on marketing material, which is what you mentioned, presentation, or you saw them at a conference, or someone spoke about them on a podcast or whatever. With all of which is marketing material and should be treated as such. Everything that's not on, well, even the news releases are marketing material. So, but the point being that I think this goes to show that you should approach this with a bottom up approach, to start at the asset level as opposed to start at the metal level. So, or at the company level, not necessarily exactly. The asset level.
Yeah.
Depending on what your strategies within the bottom up approach is. Yeah. But so yeah, I think that's a good example of and what else a good example is something else you posted this week actually on Twitter, and that's the lithium intercepts. So you have the three best holes per James Bay Lithium Company. Um, that also makes the case, in my opinion, for bottom up investing because you could have been bullish on lithium and done kind of a shotgun approach, and you would have made money here and there, but you would not have had as big of a position as you should have had in Patriot or Q2 or Azimut. So talk to me about that.
Yeah, and I think last week we talked about my thinking process around Q2 metals, stock that's doing really well on a new discovery, a new lithium discovery. And now that we talk about it in this detail, I think one of the reasons that another reason that I was not sure to buy it is that I didn't know the company, the people behind it. And you, when you see the discovery announcement, you have sometimes only an hour, sometimes only half an hour to decide. It's very difficult to get into your maximum conviction level within half an hour, not knowing the people behind it. So then you're really buying it for the discovery. And I like it a lot. I've done it with Lavras a year earlier. But at that point, I knew a couple of people who knew the team, and I really trust those people, and those people trust the team. So that made it a bit easier. So I could leave that for a moment, not focus on the team, focus on the discovery. I noticed that there was no warrant outstanding and all those things, and then I'm comfortable buying a big position. In Q2, I didn't know the team, I didn't like the structure. They come out with a new good discovery. How to get into your maximum confidence level, and you could also buy a 25% position, and then when they confirm again a 50% position, you could still scale yourself into a story like that. So it is all a mental game as well, getting confidence and how to deal with your own uncertainty around news. But I think in line with this conversation, I like to invest where my confidence is really high, and that typically takes a long time to get to know the company and meet them several times and get trust in a team. And I didn't have that time with Q2 metals. And I had other concerns, and that's why I missed it. In hindsight, it is a really good discovery, and people made a lot of money on it, and will probably make more money with it because there's a whole pending that's looking really good, and that's why the stock is doing well this week. This lithium list, Q2 will probably be number one and number two in a couple of weeks from now when the pending hole comes out. Sort of confirming that they may have a better discovery. And of course, it's not a game between two, but maybe it is. Maybe they have a better discovery than Patriot Battery Metals. And look at their market cap, and look at their market cap 2 years ago. It could be a billion-dollar company if everything works in their favor. But noting that there is also still risk, even though it may not feel that way right now.
Yeah, for sure. This might be a good point to move on to the kind of the movers that we touched upon a couple of them this week. But there are quite a few. I see that at the top of your list, there's a Aero Energy Limited, apparently a uranium company, excuse me, that has a JV of sorts. And I know you don't necessarily want to talk about it, but I briefly just had a look because obviously uranium is kind of close to my heart. And they report these bonanza grades over literally 10 centimeters. So it's a 0.10 meter intercept, the highest grade that they have in the headline. That's all promotion. And again, I suppose that has to happen. But that's just a note to people interested in uranium that look at the length of those intercepts. So like that's the bare minimum you can do. But
Yeah,
what
I
else?
looked at it as well. The reason I didn't highlight it for today is that first of all, I don't really feel comfortable in uranium. I don't think I have an edge. I've never spent so much time on it that I think I'm better than other people speculating in these things. I looked at it as well. I mean, the corporate presentation looks really good, almost too good to my liking. The really technical teams typically don't have the best looking presentation, but it's also sort of a thing for me when it's designed almost to perfection. Then I feel like the presentation is more important than the data on it. But there's some good people behind the company. They are in that same region as the other uranium discoveries, but then on the northern side, I decided indeed not to touch it because there's not much I can say that I think I can really add a lot of my knowledge here. That's why I decided not to. But I looked at it and felt Hmm. It's a very nice website, a very nice presentation, and an interesting result. Um, I think Canaleska also started with small intercept, so I don't think if it's high grade enough, it's not that it cannot work, as far as I can see. But I would probably leave it there.
Yeah. Well, yeah, and especially when it's 10 centimeters. I mean, that's not at all representative, and then continuity comes in and all these things. But that's again, that's outside of the topic. I just thought just briefly touch upon it because it's at the top of the list. But what else do you have?
Well, Metal Energy is one of the bigger movers.
Hmm.
I tried another sub 5 cent company, uh, arguing that it's not smart to invest in these things, and another one that I tried to buy this week. So, well, the reason that I tried to buy it and it didn't work out because my broker, my discount broker, when I put the order in, said review, probably because the number of shares was too high. It was a 1 cent stock, so I was planning to buy millions of shares, but
Hmm.
not that it's worth that much. But I saw the news. This is a company in the same from the same stable as Awalé and a couple of other ones that you follow. I think the team is good enough that they wouldn't just buy the property as just a promote. So I think okay, they are probably they probably like the property. The property is close to tech, big land package, a company that's completely stranded with a pretty interesting nickel project that has no value right now, but maybe in a good nickel market will. So I felt this could be either a trade or a longer term thing. I don't have the time to think about it right now, but at 1 cent and a 1 million market cap, I am willing to play this one because of the group running it. Put in my bid at 1.5 or 2 cents. Then my broker sort of canceled that one because maybe the number of shares or whatever reason, I got a review on that order and it didn't go through, which was a shame because the stock went from 1.5, 2 cents to 4 cents this week. Sometimes it's quite easy to predict these moves because if a company trades at a million, the group is pretty good and the project is new, there's suddenly a reason for people to buy it. And what I expected happened. The stock started running a little bit from 1 cent to 4 cents, 3.5 cents. And I feel like there's probably more upside just because of the new project. With this, also there will be risk because they will have to dilute, they will have to pay shares to this company. But it sounded like a good speculation this week, and that's why I tried it. And it didn't work for me, but it worked for some other people. As you can see in this list, this is the first minute of trading. There was 2.8 million shares available in that first minute, and that $48,000 is worth $114,000 3 days
Hmm.
later when it was trading at 4 cents. And that would have been the trade, but I do think there's more upside than 4 cents. So I think that $48,000 that was available in that first minute could be worth half a million in a couple of weeks or months from now. But then now I'm trying to predict a 10 bagger, and we just told each other that that's very difficult. So we'll see. We'll keep an eye on it, how it progresses. I don't own it.
Yeah. Well, the biggest challenge with these micro caps or nano caps or whatever you want to call them, sub $5 million market cap companies is of course raising capital. I believe they had $1 million in June, something along those lines again. Yeah, and it's that dilution issue, right? So if the asset is very good, then that of course won't be negative dilution, but the asset has to be like it almost has to be very good at this point. And I am potentially interviewing Merge soon. I know the management team and the group behind it obviously very well. And I did see, though, that Steven Stewart acquired 2 million common shares on October 10. So on Thursday last week. And then this week. And the market, he bought at 3 cents. So again, it's 2 million shares. And then now it says 11.1 million common shares is what the acquirer owned and exercised control direction over. So okay, so well, he's betting big on it, so it might be interesting to get him back on. I just had him on last week though, so we'll see where this goes. But again, just a note here being that it's sometimes or most of the times it can be challenging for companies with that small of a market cap because this is really a financing game, and the lower your market cap, the more expensive the financing is. So
That's
that's
the risk. That's the risk. But looking at the terms, which are a bit challenging for a small company like this, I felt, and that's why I was trying to buy it, that it should be doable. The cash they have to pay right now, they have on hand. The shares they have to issue right now, they can just issue. That would just dilute the stock from 1 million to $1.1 million market cap, and at 1.5 cents, of course, 1.6 million and 1.7 million. I felt that with this new property, assuming that they have a good story on why they bought it, and there's a big property next to tech, not a postage stamp next to tech, and a royalty very short term, that should bring the market cap to at least 3 or 4 or 5 million to bring it in line with other cheap, exploration plays. And then only a year from now, you have to, well, only a year short, but $1 million spent. I think they should be able to raise $1 million when they're trading at 4 or 5 million market cap, and I think that would then bring them, into the second year. I felt that's why I was thinking at 1.5 or 2 cents, I'm willing to buy it because it will most likely give me an immediate lift of 50 to 100%. And at that point, I had time to talk to the company and think about it, like how do I want to treat these shares. I didn't get in that position, and then I'm a little bit cheap because I'm from the Netherlands, and I didn't want to pay 2.5 or 3 cents, and that's why I let it go. It's hard for me to pay more just because my broker, sort of put my order into a pending status, and just for that reason to pay double the price. That's not what Dutch people do. So
that's a very accurate thing that I think not many people are going to understand, but it is actually true and funny. I made a joke on Twitter about your humor actually, but it's been improving since you've been talking to me. So maybe you're helping me with my portfolio and I'm helping you with some humor, which is good. So yes, I didn't look too much into the property itself, although the property here obviously is the most important thing in this acquisition. I do know, again, infrastructure is good. It's in the right neighborhood. It's close to Vancouver, but also the geological setting looks right, as in it's close to the Highland Valley copper mine. That's one of the largest copper mines, open pit copper mines in Canada. So it seems to be in the right neighborhood to begin with. They have 2 priority zones that they want to go to, so it seems like they know more about the property. It's not starting from zero. It's also, there's been historic work done on it, so over 55,000 meters of drilling has been completed, so they can start from somewhere. There's permits in place, so there are positives about the project. And I haven't looked too much into it, so I'm not saying it's the next best thing, but hoping I can interview them soon and do kind of a deep dive on this deal and the project as well. But those risks that you mentioned, they still, of course, they still remain. And the budgets to explore something like that also have to be decent. So again, all things to be discussed.
But it doesn't have to be the best thing at a 2 or 3 million market cap. If it's just a mediocre thing, it would be enough for the stock to go. That's why I think it's not just owning the best projects. I mean, owning the best project is nice, but if the best projects are already trading at fair value, then you're betting on that best project becoming better. And of course, in a lot of cases, that's true. I think Snowline will get better, and the best projects typically do get better. But if you find something that in some companies would trade at $10 million or $20 million already, what they have right now, then buying it at $1.5 million is a good idea if you trust the team. And I don't know the team that well, but I know enough about the group that's running this company that I was comfortable buying it. So it doesn't have to be the best thing in the world to actually enter something like this. That was the reason behind. And maybe this is a little bit against my earlier pitch or my earlier story, but I do play these smaller things every now and then if I feel there's not much downside, a lot of upside, at least short term, and then I can still decide if I think it's worth a longer term wait.
Yeah, and it doesn't take much to move things like this again. So yeah, that's a good point. What else you have on here though before I get to my interview with Andrew? You touched upon Hemlo. We haven't talked about Sitka. Sitka, actually, since I interviewed them, they've more than doubled, I believe. And they had some news this week, although no assay results yet. But the market seems to be getting excited on it, and despite of what happened with Victoria Gold. So, what do you have to say about that?
Yeah, Sitka has been recommended to me a few times by a number of people. I've seen it. I've never. Sometimes you just feel interested in a story, and sometimes you don't feel that same level. Maybe I've not owned many Yukon companies before, so I don't really know I know the standard stuff about the Yukon, but I don't know enough to my liking to really feel like a bit of a to have an edge again. But I see them every time at 20 cents when they have some good news. And then when I look a couple of months later, they were back at 15 cents again. And of course, also diluting because they are drilling and doing good work, I think. When I listen to, I've been at one dinner, lunch once in Vancouver about the Yukon, and they were presenting. And I feel like they are, doing a good job. But never really felt like I can see this going from here to there. But in a couple of months ago, they bought a new property from Victoria Gold, and that property was sort of sitting next to their deposit they already delineated. They had a 1.3 million ounce deposit, I think, that they announced in 2023, and the high grade zone is zero point 0.8 grams. Doesn't sound high grade, but it's fairly high grade for them, almost a million ounces at that grade. Now with the new property, they started exploring. Crescat has been sort of promoting the name, and Quinton has sort of outlined like what the potential is at depth. They started trying it, and now they report visuals a little bit in line with the way Snowline reported visuals. And I think they want to make a little bit of a connection, like not all the deposits in this belt are low grade. I mean, they're typically low grade. Banyan is a grade, gram. Victoria, I don't know the grade by heart, but it's not very high grade. In Alaska, they're mining 0.5 grams. So I think the argument is these grades could already work, but Snowline has proven that there's possibility for higher grade. And with these visuals of, visible gold in the core at several spots in the drill hole, and I think currently 2 holes pending, people are speculating that there's actually high grade, as Quinton has said a couple of times in his talks. So we'll see. I didn't buy it. They are really moving to a decent market cap right now. They went from that 15, 20 cent level that they have been trading at for a long time to now, I think almost 50 cent, isn't it? Let me quickly have a look. Yeah, almost 50 cents and a $150 million valuation. If you include the warrants, it's probably closer to maybe 200 million. So yeah, it's actually becoming a pretty big company. So hopefully those holes actually prove to be good. I don't own it, but it's interesting to see that they finally succeed with what they have been trying to tell the market, I think, is that the upside is there and the grade could be there, and maybe it's actually true. So we will see it very soon. And I made this picture of Snowline versus Sitka. And yeah, I think it's a pretty decent market cap already for what they have. So hopefully these holes are going to be good.
Well, that's what I was going to ask. Do you think the risk is heightened here because it's a $150+ million market cap, 315 million shares outstanding, fully diluted? That's probably a lot. Well, the market cap is higher than that, fully diluted. So it's getting value already. I mean, this is not just like we said with merge. Like it doesn't take too much to move something like that. With Sitka, it does take much to move it from here into multi-bagger territory, or is it not? Like, do the assays have to be perfect, or do they just have to be good enough?
Well, the essays have to be quite impressive, I think. For sure to continue this move upwards, but even to maintain this market cap, I always know the warrants. In this case, I don't know the exact number, but I think it's at least about 30 or 40 million warrants. Maybe I can quickly look it up. Yeah, 14 million warrants were outstanding in the previous financials. Right now, they issued another 13. So let's just say 50 million warrants, adding on to their 315 million shares, so 360. Yeah. Well, it is going towards a $200 million market cap. Let's put it like this. And they just raised money, so they don't have to raise immediately. But you need some really good holes to maintain a market cap like that, right? And if one or two of these holes really hit and they can explain the market, that is opens everything up and the grade increases, and well, then maybe that market cap could be maintained. But this is not a point I would buy. Waiting for essays, expectations are high, share price already went up. Probably the opportunity was a month or two ago, and at that point I wasn't comfortable enough with the situation as it was to buy it. So I'm certainly not going to buy it right now. But good to see that a company has success, and Yeah, I made this snowline comparison. Not that I think it's necessarily the same, but they are the same belt. They refer to each other. Snowline told them before they started, like, we hope to get grades like you, and obviously they became much better
Hmm.
and became the discovery of the last couple of years, I guess. But yeah, let's see what Sitka is gonna find. I'm still very discovery oriented, even though I'm not playing all these bets. So I'm very curious what this will be. But the market likes it. That's obvious.
Yeah. Good. Well, what else are we talking about? Anything that you want to add here, or am I jumping to the interview with Andrew?
No, we had a bit of insider stuff still. I mean, I prepared some data about insiders, but I
Right.
think that would make it a little bit of a funny discussion if we put that really short. So maybe next time, because then we look a little bit at the other side of the market, not at the 5 cent stocks, but at, hey, is there an opportunity maybe in companies where you have an Eric Sprott, a Ryan Beatty, Gignac family, the big names, and those names are never below 5 cents unless you are in the seed rounds together with them. And I don't know many people who are. So maybe it's worth paying 50 cents or $1 for a change if you have these people involved. So we could discuss that next time.
Yep, that's a perfect topic for next time. I think you've posted some snaps out of that on Twitter. So I'll put that on the screen now and kind of tease it for next week. But thank you so much for doing this.
Yes, for sure.
All right, Andrew, you just recently published a thread on Twitter highlighting why the Ivory Coast is getting a lot of attention right now. And it comes on the back of Allied Gold closing an almost $200 million, and that's Canadian dollars, private placement. And for people listening, Allied Gold has three producing assets and as well development projects across Africa, but including Cote d'Ivoire, Mali, and Ethiopia. And really, this is one of the main one of the many, not main, one of the many rather large investments that we've seen going into the region recently. I have, of course, fair disclaimer, not as confession, a large part of my portfolio exposed to Awalé and even more so to West Africa with a couple of other plays there, and in Cote d'Ivoire specifically. So I am biased, but every time I tell a normal person about it, they kind of seem to shriek in surprise. So I thought maybe I am drinking the Kool-Aid here. I've never been there. I don't quite know what the situation is on the ground. I'm hearing rumors and reading headlines that suggest that I might be out of my mind, which is not so hard to conceive given my hair color. But I thought maybe I'd sit down for a bit of the hand holding with you here, Andrew, because you've spent the majority of your career in Africa, now as of most recently, almost a decade in Cote d'Ivoire specifically. So I hope you'll be able to help me better understand kind of the risk reward of the region. And let's maybe start with the opportunity first, because I mean, there are countless projects across virtually all of the metals that I could invest in Canada or the US and even in Europe. Why would I bother with learning about a new jurisdiction like Cote d'Ivoire to begin with? What's special about it?
I guess Cote d'Ivoire is look, it's a different jurisdiction to some of the others in West Africa. It's always been an economic sort of powerhouse, but it's really, I think, become one of the economic powerhouses particularly in Francophone West Africa. I guess the world before really pointed to Dakar. This is sort of pre-2012 to 2015. But post those times, I think Cote d'Ivoire has truly grown up and become really the economic powerhouse of Francophone West Africa. And then you've got Ghana next door to there, which is strong economically as well. And that's from a diversified economy. So, they've gone from and mining has become a bigger part of it in the last 12 years. But there's agriculture, oil and gas, various other industries. There's public-private partnerships for energy. There is a lot going on economically in Cote d'Ivoire, and if you look at their GDP growth year on year for the last sort of 12 years, it's quite significant. I think it's in the 6 to 7% range, and so it's really become a very strong economy, and it's also and with that, it's, you know, creates a burgeoning middle class, and all those sorts of things as well. So, and it's got one of the largest ports in the region, but there's actually a second one which is catching up to the Abidjan port in San Pedro. So there's two big ports in Côte d'Ivoire, and so some of the other countries that people talk about, I guess West Africa, we got to remember it's a big country, well, not country, big continent, if you like. And Africa itself is bigger than North America, include, you know, Canada, if you include Canada and the United States. West Africa, you know, Africa is bigger, and West Africa itself would be, you know, a similar size to Canada, so or the US. So, and each one of those countries is quite different politically, and has got its own, I guess, background issues and history and all those sorts of things, which we could go into depth on. I mean, I did live in Burkina Faso for 5 years, between 2010 and 2015. And, you know, the places like that, you know, their history is different. And so what is happening in those countries, you know, I guess what you read and the people that you're talking to, you know, I guess they're reading about things that have happened extremely recently, but they're a product of a protracted history. When I was actually living in Burkina, there was a revolution, you know, and that left a huge power vacuum, and you know, that creates its own problems. It creates problems within, you know, government institutions. And the same things have gone on in Mali and also in Niger as well. So, you know, the Côte d'Ivoire has got quite strong institutions behind whoever the political parties are, and with that sort of burgeoning middle class and all those sort of things, and the development, there is an appetite in Côte d'Ivoire to keep moving in that direction.
It's actually,
yeah,
I'm sorry for interrupting here, but that difference that you're making there, that's an interesting part for me, because one of the comments on that thread on Twitter said something along the lines of, yeah, but this could change overnight. And I was like, could, or something along those lines, but in light of what's been happening again in Burkina, and someone might read it and think, yeah, that may be true, because it seems like things in Burkina changed overnight. I don't think that's true, just to what you're saying here, because in from what I know, and I did look into what's happening there, because again, I did have a lot of money close to it, a lot to me close to that region. And apparently what changed overnight is people hearing about the conflict, because it became it became a big thing in the media. So yes, the media started covering it overnight, but these things have been there for the challenges have been there for decades. So could Côte d'Ivoire as easily change as some of the other African countries overnight?
That's not the way I view it, or, you know, people who are clearly investing in Côte d'Ivoire view it. And there is, as I mentioned, like, there's significant investments in Côte d'Ivoire, and they're not just in the mining industry. So the mining industry has changed a lot since 2012. So pre-2012, there was not a strong regulatory framework around exploration and mining. And so there was more risk. And because of that perceived risk, you know, when you compared it to other countries like Ghana, or at the time, you know, so there was probably more investment going into other countries in West Africa. But with that change in that regulatory framework, there's been, I mean, I've watched it happen. We were lucky as Awalé because we were in and kind of first movers. But, you know, post 2015, 2016, once that sort of framework was embedded, the level investment in mining in Côte d'Ivoire has just been exponential. So, but yeah, so to go back to your question, the fact that it is such a different, it's much more politically mature. There is that significant amounts of growth, and with that, you know, a middle class. You know, Abidjan is a really cosmopolitan city. You know, like the differences between like I've worked in pretty much every West African country, and so the differences between Cote d'Ivoire and those other countries is significant. I think, I mean, you can delve into this as much as you like, but the guy that was the first president of Cote d'Ivoire, Houphouët-Boigny, you know, I guess he created this really good blueprint for development in Cote d'Ivoire. And there have been troubles in Cote d'Ivoire since Boigny around elections, and you know, we can't hide those things, but that framework that he set up, whoever has been the political party in power, they have used that framework to continually develop the country. It's really quite well planned out. You know, there's been progressive electrification, particularly in the last 10 years. You know, the road network has been improved significantly. You know, there's domestic flights to key centers throughout the country. You know, it's just a different, it's just such a different place compared to my experience in some other West African countries. So, you know, the chances of something like that happening would be, you know, in comparison to those countries, other countries, is that you immediately get compared to because of the news. That's not the situation in Cote d'Ivoire. That really isn't the situation.
I want to talk about many of the things that you touched upon there, including infrastructure and all these things. But what about from a safety perspective? I mean, again, in that post that you made, you talk about that you call Cote d'Ivoire a model of security, stability, and safety. Is that the case on the ground? Like when you personally go there, which I know you often do, can you just walk to the shop or go for a hike, walk the properties, walk the project normally, or like what does that look like?
Yeah, it's it's like walking, like, yeah, I'm in Abidjan. Yeah, I'm a walk out of our office in Abidjan and down to a supermarket which looks like any other Western supermarket, and buy things. And you know, there is the African flavor to it as well, because there's you know, fruit and vegetable stalls on the side of the road that you pass on the way to it, and things like that. But you know, yeah, I go out to, I'll just go to a local marquee and sit outside and have an African barbecue and a beer and watch a game of football. You know, have a laugh with the, you know, local Ivorian guys and girls that are watching the football as well, or anything like that. It's a really comfortable city to be in. And then in the field, yeah, we just move in the field with no, yeah, we just move in the field and do what we need to do, and don't have any, you know, additional. We don't have the need for any additional strong security measures. And I think something I do say to people is that you know, Cote d'Ivoire, so people do talk about the troubles in those more Sahelian countries, and you know, there's an awareness in places like Cote d'Ivoire, Ghana, Guinea as well, about those troubles, and there is significant, I guess, control along the borders with various military stations. The gendarmerie have got big battalions in the larger centres that are in those northern regions, and that's ODNE included. So the ODNE battalion was created in the last couple of years, but you know, there's a gendarme battalion installed. The 9th Battalion is now installed in ODNE. So there is an awareness, an internal awareness of surrounding issues as well, and there really are not, you know, the chances of incursions and things like that in Cote d'Ivoire are slim. You can never say never, but you know, and you know, operationally, we just stay in close communication with the gendarmerie and the military battalions that are based in ODNE. We get consistent and good feedback from them. And well, it's a good opportunity for me to say, as a company, the way that I've been operating in West Africa for a long time, and one of the keys to operating well in West Africa is stakeholder engagement. So we've always had strong engagement, at all levels, within the local community, and of course the central government people, the ministry people in Abidjan. So we have a really nice network of friends. I'll call them friends, and people that we communicate with on a regular basis, to make sure that we're keeping tabs on what's going on. But there is, you definitely don't feel unsafe in that country, and we drive around. We drive from Abidjan to site with samples, and other logistic needs and all those sorts of things. We move around the country with no problems at all.
Must be nice to have a group of friends. I don't know what that feels like. What about you talk about you touch upon the borders here, which is also something that is specifically to the north, and this again something you touch upon in the post. But you say they're safely guarded, but how does border control work? Like that, is that in place? Like if someone wants to cross over from another country into Cote d'Ivoire, they would have to like pass document check and everything else, just like in the West?
Oh, absolutely. Yeah. Yeah, absolutely. So if you like even the minor roads have a post where you will have to show identification, license, registration. They cross everything, make sure that you've got the correct documentation for all the people in the vehicles. If buses go through, the buses get stopped. Everyone on the bus gets their ID checked. All that sort of thing. So at the bigger borders where all the trucks and everything pass, it's not just a border police. There is customs. There is all those sorts of things, and so you can't just sort of. They are big borders, so I guess small groups could pass, on bush tracks that maybe just a motorbike could pass on or something like that. But any sort of passable dirt road, there are border posts. There are police or gendarme posted along the borders that check people going to and from.
There's a couple of things again that you're mentioning, the roads and some other stuff that I want to get to a bit later on. But let's talk about, because you're reminding me, talking about the government here, you're reminding me of permitting, which is in the West. I said, oh, why would I be interested in Cote d'Ivoire to begin with if I could put my money in the US or Canada, whatever? Permitting and growing red tape in the West is becoming a huge problem. So how is that for you? Is there a framework in place? Maybe walk me through a typical permitting process, and like again for you, for example, you're now doing work on your early stage 100% owned land. How did you get those permits to begin with? But then more importantly, what else do you have to get to be able to drill, and what are the typical timelines involved with that process?
To drill, there's really to drill if you've got a granted permit to drill holes, it's about local stakeholder engagement. So understanding who actually owns the land, communicating with them, saying that you'd like to go in and do some work, and effectively getting local permissions. And even in that situation, if we have a lot of one of the major farming things or commercial farming things in our region is cashews. So cashew trees are always there. We always try not to damage an entire tree or anything like that. We will, but even if we cut branches off the cashew trees and things like that, there is a process. So we talk to the landholders, and then we engage the local agricultural ministry representative. They come and look at what we're going to do and what if any damage is going to be made. There is actually a framework for us to compensate the farmers for any damage that we might make building a drill pad or something like that. So right down to that level, there is a framework. And so for the permitting process, there's a framework as well. So, as a company, when we went into Côte d'Ivoire, we had to prove our financial and technical capability. So first we established a company, and then we prove our financial and technical capability to undertake exploration, and then you can peg permits, and effectively that's what we did. So of the 5 permits that we have outside the joint venture, one of them is we took up as an option agreement with another company called Taraco. But the other 4 applications that we have, they're applications that I made as Awalé Resources. And that's there is a process, and then there is a process to get those permits granted, and we're currently in that process to start getting those permits granted. So there is a framework for all of these steps that you undertake. So so that is what makes it, I guess, attractive to foreign investment is because there is this regulatory framework that you can operate within, and you get things done within that regulatory framework. There's no sort of any sort of peripheral things that may cause you issues, because you can always refer back to the framework, and you're following that framework, and you just get things done in an orderly and legal fashion.
Well, and so to go back though to what I was asking about was timeline, and again, those are forward-looking statements that may or may not happen in the future. But if you have something worth mining on your project, and specifically the 100% land, because again, it is early stage and it's undrilled yet, you do want to have drill targets on it soon. So let's assume you can drill it sometime next year. So 2025, and again, we're making assumptions, but let's assume that you make a worthwhile discovery.
Mm-hmm.
What's a realistic time frame, or is there an example that you can give me that someone made a discovery and then went into production? Permits, local support, water, everything included. How quickly can that happen?
Very quickly. I mean, all the recent developments have happened really gone from sort of PEA to first pour in a very quick and orderly fashion. So I guess one of the most recent ones is Endeavour with what they call the Figue. So when they took that on, I think the project was called Fitecro, but they took that on in 2015. It had some early stage work done by the government mining authority called Sodomy. But I think they published a maiden resource in 2018, and then kept working on it, and went into sort of PEA, PFS in 2021. And then in 2022, they published the DFS and launched construction. And now they've got a production guidance for this year of 100,000 ounces. So from
Wait, so
maiden
6
resource
years
in
from
maiden resource 2018,
yeah,
production 2024.
6 years from MRE to production.
Uh-huh.
That's not 2008. That's 2018.
Yeah.
Okay. That is quick. I think I read an article from S&P Global a couple of weeks ago saying that, give you an example, the US has a timeline on average of 29 years. So if something was discovered when I was born, it's still not in production. And that is...
look, Le Figue, or formerly Fitecro, it really, there's a discovery pre-Endeavour coming in, but they still had to do all that drilling to get to an international maiden resource level, which they did between 2015 and 2018. And then, so from 2018 to now, it went through, maiden resource into production. 6 years.
Talk to me about water in that process too, by the way. I mean, water is, of course, a big part of every mining, but it's an exploration operation. What's the water situation in Cote d'Ivoire? How do you get your permits? Where do you get the water from?
Yeah, I mean, when you do your PEA, PFS, you do have to do a, environmental social impact assessment. But as part of that, there are Cote d'Ivoire is not the desert, so it's actually very close to. So it's subtropical, subtropical to tropical. So when you're in Abidjan, in the south, it's very much a tropical country. And the forests, like the forests that are still around, like in the south of the country, like there's some national parks. They're very much kind of tropical, sort of tropical to subtropical forests. And so even in the north of the country, really, we have a big monsoon season or big rainy season for 3 months where there's meters of rain, and then it's dry for the rest of the year. So there is significant opportunity for catchment water, and catchment water for all your processed water and all those sorts of things is a good thing for community as well, in that you can create water supply for agriculture. So you can actually increase the the level of agriculture in the region. So rather than, for us, for example, potentially you could move away from predominantly say cashew as a commercial crop to other cropping, because there's a dam with constant water supply and things like that. So and then West Africa is also very lucky in that there is a significant amount of groundwater in West Africa because of all that tropical rainfall. So I guess water supply is not generally viewed as an issue, particularly in those southern West African countries like Cote d'Ivoire, Ghana. It's when you get up into Niger and places like that, there's not so much rainfall, but there are very deep aquifers up there which get used for production, like on the uranium mines and things like that. So, yeah, where we are, there is water supply is not a problem, and you can organize your environmental social aspects of creating your consistent water supply around that.
And getting the permits to do that, how is that? Because I mean, there's a lot of groundwater in Nevada too, but getting a water permit, and specifically in some parts of Nevada, could be very challenging. So how's that for you in Cote d'Ivoire?
Yeah, look, again, it's not a challenge as long as you've done that ESIA to the required level.
How about other infrastructure? I mean, in the post, you also talk about infrastructure, and by the looks of the pictures that I've seen, again, the capital city, Abidjan, does look very well developed city, and I even looked it up on YouTube, and there's everything. There's nightclubs and everything else. They even call it the most visited city in Africa. I don't know if that's true, but the YouTube video said it, so it must be true. But
yeah. I mean, I wouldn't call, compared to many other countries, I wouldn't call the amount of tourism significant, but it is a major center and a bit of a draw. Like they're close to, there are beaches, there are, all those sorts of things actually quite close to Abidjan as well. So, you can get it somewhere from Europe you can fly to easily and get a bit of African flavor, if you like. All those things that come with a burgeoning economy. It's really quite a cool city because there is, a burgeoning art and music scene. There's always been a music scene in West Africa. It's a big part of the West African cultural sort of fabric, and as is art. But the African art is sort of getting, modernized, and so there is this really nice sort of culturally, it's really interesting as well from that perspective. So, people, there is a big interest, I guess, from certain Western people in that kind of sense, and Abidjan is a draw for that sort of cultural activity, if you like, too. So, and plenty of good restaurants, whether they be sort of a Western style to that again, that more African flavor. It's a cosmopolitan city, absolutely a cosmopolitan city.
And when I look at these videos and you look at how the capital city is connected to other cities, I see three-line highways and just develop roads and everything and electricity. But the point is, or what I was going with this is, your projects are in the northwestern part of the country. So, and Abidjan is in the south of the country. How's the infrastructure there from, again, a transport, power, and communication standpoint?
Yeah, look, to be totally honest, like the Kabadougou region, which is where we are, is one of the least developed regions in Côte d'Ivoire. It is one of the furthest points from Abidjan, but there are sealed roads that get you there, and there is also local flights. It is quite well electrified, even into the smaller, very small villages, which would be hundreds of people. So there is electricity availability for the populations. Water supply is generally good within the populations, and all those sorts of things. So I think it from my experience and what I've seen in regional centers in West Africa, ODNA is still quite good. Like it's not it's going quite well. It certainly would, I think, some further economic development through mine development or something like that would be well received in ODNA as well, because it just adds, starts to diversify their economy too. But there is effectively two ways to get into ODNA on sealed roads: one that goes to the west, to the east, and then down towards Abidjan, and then there's a road that goes south and then across to Abidjan. And those roads are being upgraded on a piece by piece basis. And there are also new roads. So there's actually a road currently being built from ODNA to Segula, where now Fortuna has an operating mine. So there's a new road being built between us and them. And the high voltage power from us would be probably 100 kilometers away. And there are plans, even within the Ivorian sort of that framework that I was talking about with Houphouët-Boigny, those plans include bringing that high voltage power into the northwest of the country as well. So, it's a developing country, and it's developing rapidly.
Yeah. So come time to actually build and again, forward-looking statements, we're talking pre-resource company here, but if you ever are to build a mine there, you don't expect blowout capex, because, and I'm comparing it to other regions, like I'm thinking about the Yukon, for example, or and places like that, where they have to go and put everything from scratch. So for you don't expect blowout capex because of having to put in all this infrastructure anew, if you will.
No, I don't think so. And the thing is that topographically it's flat. It's not like you have to contend with things, and environmentally, the rainfall, although the actual months it all falls, where everyone knows that there can be particular months where there is a lot of rain, all those sorts of things, that they all just get factored into your feasibility part of the thing. And if the mine is developed before, there is high voltage power to run a large plant, then again that just gets, it's 100 kilometers is not that far if you require that much power on a development project that big. So and potentially things like that can also become public-private too, if it is at that scale, because it's good for the country, and then it can also be good to you. So there can be public-private partnerships on those kind of extensions too. But I mean, who knows? I mean, again, forward-looking statements and speculation. But Tongon's a huge mine, and infrastructure wise, when it was developed, it would have been nothing like what ODN is. It's yeah.
I want to get to that public-private collaboration more, but maybe in a little bit of a roundabout way, because I want to talk about the geological potential here for a second too, where your forte really is. And again, going back to that post, in it, you mentioned that despite 33% of the West African Birimian greenstone belt being in Cote d'Ivoire, and there apparently have been over 300 million ounces of gold found in West Africa, the country itself, so Cote d'Ivoire itself, only accounts for just about 10% of that. So what, 30 million ounces of that gold? How come? What have been the hurdles for finding it, and why is that changing now?
I think I need to update that. I need to go back and do that calculation again, because there's been so much development in Cote d'Ivoire since I first I first sort of started using that figure sort of back in 2015, 2016. So there has been significant amount. So, pre-2012. So the main thing is regulatory framework, which we've talked about before. So with regulatory framework, it brings confidence in industry and confidence in the bigger investors to bring big money into Cote d'Ivoire. So we're not just talking about exploration dollars where a company raises $5 or $10 million to go and do some exploring. We're talking about the hundreds of millions of dollars that you just talked about with Allied Gold to develop projects. And so, I think pre-2012, properly operating mines, there was like 3. And so since 2012, one of those or two of those operating mines have had or undergoing expansion. So Endeavour spent a significant amount of money on upgrading the mill and expanding production at Idhi. You've got Allied Gold, who are now spending money at Bonikro, which was formerly a Newcrest project before 2012. And then post 2012, you've had the other mines come online. So, there's been the development by Tieto, development by Rox Gold Segula, development projects with Endeavour. And then there is also, pipeline spending coming in with companies that have had discoveries and gone into PEA, like Montage. So, we're in that 3 operating mines in the last 10 years has gone to, I think, 6 or 8. And then behind that, you've got another 3 or 4 development, near-term development projects. And then you've got companies like us that are the next ones, in that pipeline. So, it's the amount of investment dollars is in the hundreds of millions in mining in Cote d'Ivoire. And something I need to do is actually go back through all the data and just pick up all those numbers, because it's quite astounding to be part of that development. It's exciting stuff. It really is exciting stuff. And so that comes back to what I was talking about before, is that confidence in the Ivorian economy and that it's a good investment destination, because these are not small amounts of money. These are to even the bigger sort of investment groups that are putting these levels of cash in, that's not small risk for them either. So it's they're putting the dollars in.
It's actually not surprising to me, again, in light of what I said about the US, 29 years development time frame. It's not surprising to me the capital is going to go looking for a different home, right? Where they can do stuff like what you mentioned, 2018 to 2024, you go from MRE to production, right? So that's actually not surprising for me to hear. As you tap into what you call the untapped potential here, though, and as international interest grows in Cote d'Ivoire's mining sector on the back of a rising gold price, making those in situ ounces even more valuable, do you see a risk of resource nationalism in any way? Because that's what they're talking about in other places in Africa, right?
Again, different political maturity. So there is that level of political maturity in Cote d'Ivoire where, there are good frameworks for the economy or the country to reap success from multiple operating mines. So other countries that I guess have had troubles of the scale of the other ones, I guess the thinking is different, and that political maturity I think is different. So the more operating mines is much more desirable, I think, for an economy than going, oh, we can run all these mines ourselves. And I think there is a tacit understanding there. And look, I think the attitudes of international companies is very different to what it was 15, 20 years ago as well. So I mean, we personally put in a significant amount of time to personal development of our team, and we want to produce geologists and managers that can go off and do things for themselves with other, hopefully they grow with us, but there may be opportunities with other companies or anything like that where our attitude is to get people to a level where they can operate things or achieve goals and milestones that you need to develop a project. And so and I think that attitude is becoming quite consistent across international companies that are operating in places like Cote d'Ivoire. There is a large level of transparency between operators in country and the state.
On that topic of getting those projects developed, what else I'm thinking about is, what about essentials, even to get there, like a drilling company, for example, or then trucking, or but again, global issue these days, but skilled labor. Given that apparently Cote d'Ivoire, again, hasn't been the center of West Africa's gold booms before the last 15 years, how is that now? Do you have all of these essentials to move from now to potentially a mining scenario?
Yeah, like, look, there are a significant number of drilling companies, some of them quite large, and so from a large sort of 70 rig companies to smaller 2 to 10 rig operators. So there is that availability. There is there are now there are across West Africa, there are a significant number of actual mine and haulage operators that have grown out of other mines being developed in West Africa. So if from Ghana is one of the earliest movers, and then Mali, kind of particularly Western Mali, followed. There has been a lot of mines, as you said. There's 300 million ounces in the region. So there has been a lot of mine development, and so there are a lot of skills throughout West Africa that are actually there. And as I mentioned, like, companies now put even more time into training local people and bringing in local content. So using local contractors and operators and things like that is a really big part of operating in these countries. So yes, there is those potential issues, but it's not insurmountable. Through training and going about things the right way.
What I found very interesting or telling in that post, again, and you touched upon it just a couple of minutes ago was the GDP chart that you published, which goes almost in a straight line, or as in a straight line as possible, from lower left to upper right. And apparently, agriculture together with mining is one of the one of the few reasons why that's happening. But is there competition for labor as the economy of the country is growing? Like, are you and agriculture or manufacturing going to be competing for labor?
Oh, look, the labour pool is quite large.
Mm.
And you know, there is the funny with agriculture, it's kind of funny because there is a large amount of agriculture, but it's not like broadacre farming. There are, you know, when you go into the regions that produce a lot of cocoa, for example, or we are with the cashews, there are multiple families that are producing commercial crops. And that's sort of, I guess, a little bit internal. And so, you know, look, the labour pool is large. And so as long as you create that level of education, I don't see that as an issue. And there is education or schools in throughout the country. So the level of look, again, we're a little bit behind in the Odieni district, but look, I can't remember the numbers off the top of my head, but the level of people to be able to read, write, do all those sorts of things is quite good in Côte d'Ivoire. Could be a lot better. Is quite good in Côte d'Ivoire. So no, I don't necessarily see that as a huge competition for those resources. In essence, what if you look at the population distribution, you know, there are a lot more young people. So development is essential to ensure that there are things for all those people to do and make sure that they can create income.
It's also what's interesting, and I'm trying to look this up now real time, but so the population of Cote d'Ivoire is about 32 million people based on 2024 statistics, that is. And the median age is 18.2 years. So that's young. I mean, the median age in the US is 38 years,
30,
and in Canada, it's 40.
Yeah, well, I was going to say maybe 30, but yeah, that's right. So, and look, you know, there are developing country factors in all that sort of thing as well. So, you know, if you look at the older generations live longer in those Western countries, but so that's kind of changing in the African countries as well, is that people, you know, the access to health is a lot better than it used to be, and so people are living longer. But you know, it is an important factor that I think, again, politically, Côte d'Ivoire is not unaware of. They understand that there is you know, the way that their population is with a greater number of younger people, that there needs to be opportunity created for those people. And you know, and particularly in the rural centres. So when you talk about those social demographics, you know, if you like, people talk about brain drains. You know, there's potentially a brain drain from the rural centres because people migrate towards like Abidjan, Yamoussoukro, those and other bigger places within Côte d'Ivoire, because there's maybe more opportunity. So, you know, there are various taxation incentives and things like that in regional areas where the government is actually trying to ensure that there's not that brain drain towards the bigger centres as well. So, you know, this is the political maturity, right? They're trying. There is, you know, measures in place where the government is trying to address those sorts of things.
Yeah, that's kind of been the recurring topic so far that we've been talking 30, 40 minutes. Political maturity, which is a very good way of putting it. So it is making me think. I'm also thinking about artisanal mining, though. I know that there's artisanal mining happening in the region where you're at. I think they even helped you out at one point. You had some pictures about that on I think on your Twitter profile. But how much of that is still going on right now, and could that be an issue?
In some regions, there's a lot more artisanal mining than others. We do have artisanal mining in the district. Again, we did actually start working in the district in 2016. So again, there's a framework. So there are within the mining cadastral office, there have been artisanal corridors set aside, and they have become quite, they are the bigger artisanal mining area. And then I guess the attitude towards artisanal activity is that it is actually illegal, but not in those corridors. And even within the regulations, you can get 1 square kilometre, I think they are, artisanal mining permits. And most of and those are generally awarded within those corridors. But again, we've set the groundwork for us. I can't talk for other companies, but we set the groundwork for those sort of things again through that stakeholder engagement that we've had from day one. So and the other funny thing is, because of the nature of our mineralization, some of it is it's not that evident at surface, even though we've found some very high grade things. A lot of it is not that evident at surface. So where it is evident at surface, there is artisanal mining activity. But on the other hand, through our communication with the local communities, we try and we don't try and control it, but we try and keep tabs on it, and the communities themselves want to keep tabs on it as well, because if you let artisanal mining go unbridled, it can go a little bit crazy, and the communities actually don't like that either, because it can adjust their demographic too. So because a lot of the miners are actually either not even Ivorian, and things like that. So it can create issues that they need to deal with internally. They're not necessarily bad issues or anything like that, but it's just cultural things that they need to manage. And so we kind of are always in communication with them about those sorts of things as well. But it is just, as a company, you need to be setting that groundwork around those things, because artisanal mining is part of life in West Africa. It really it is. But fortunately for us, where our key things are like BBM, and at the moment BBM and Charger, and Empire before was the one you were talking about, where we made a geochem discovery, and then we had a gold rush after our geochem discovery, and that helped us sort of get more geology and drill our discovery hole. But again, we've sort of managed that situation, and there are very few artisanal miners they are still there at Empire, but there are very few. And like the mineralization of Charger, where it actually noses out at service, the area is small, and again, we were in there before any artisanal mining activity. So through that, it sort of, I guess, from the village, from the local perspective and all that sort of things, it creates some sort of level of ownership, right? So we can sort of manage what's going on there with artisanal activity.
How's the sentiment?
And keeping it not mechanized. So one of the biggest problems with artisanal mining is meant to be non-mechanized, but this is not what happens in those artisanal mining corridors and things like that. There are small, petrol crushers and all these sorts of things that get used, and then all of a sudden, it can burgeon into something much bigger. So we try to keep that artisanal mining activity to an artisanal level, rather than having people bring in equipment to undertake their mining.
That's where I was going with this, because I was going to ask, how's the sentiment toward you from the artisanals? Because if they are kind of used to, going there and just kind of digging it up with very little tools, now all of a sudden you come along, you're a foreign company. So is there friction, or are they welcoming? How does that work?
Well, I think where there is artisanal activity, we still go and drill holes without any problems at all. Okay. So I don't think there's any friction. And again, that comes through that kind of stakeholder engagement. So they will move away from an area and just focus on another place if we want to drill holes. Okay. And so there is also, and this is the thing, there is that regulatory framework in Côte d'Ivoire. So they also understand that they're illegal. And so we don't want to create necessarily problems for them, but if they started doing things in the wrong manner, then potentially that would raise the eyes of, the local authorities and things like that, and they would create problems for themselves too. But, we don't have any of those issues because we have that communication. And I've got plenty of photos of me standing in the middle of hundreds of artisanal miners, picking up rocks and looking at them with my hand lens. And they're just puzzled about why the hell is this white guy picking up rocks and getting this little thing out and spying at them really closely to figure out what they are. And so I've got photos of me where I'm handing them the rock and the hand lens so they can actually look through the hand lens and see the rock that they're digging up, at 10 or 20 times magnification. So, it's a, there is a, I personally, like, there are some regions, where it gets difficult, but me personally, in Côte d'Ivoire, Burkina, and all these other countries that I've worked in, I've never had any issues with the artisanal. I guess what people think or can create in their minds is extremely different from the reality on the ground.
I know you almost have to go here, so I'll make it quick maybe here toward the end. But you're bullish in Côte d'Ivoire. You like it, not unexpected given your whole career, and a good chunk of your net worth depends on it right now. I'm obviously biased because a lot of my money is in the region too. But what about other large investors and maybe institutions who have, again, proper risk management in place? When they call you, what are they telling you? Or when you call them or approach them, are they willing to enter the Ivory Coast now? How's investment from, again, a money management standpoint?
Yeah, I think, look, in that general discussion, there's a level of comfort to putting money into Côte d'Ivoire, and from an institutional perspective, before we talked about those large investments, that's actually now trickling down into smaller market caps like Awalé. So the last cap raise we did, a significant, like, probably, I don't know, 80% of that cap raise was institutional investment. I don't know how else I would. So that's, so there is that level of comfort with Côte d'Ivoire as a jurisdiction, and so we had Franklin was the lead order. They're a huge fund, and then there are various others in there, and so there is a level of comfort, and Montage next door to us is a classic example. So the Lundin sort of group is come in a big way with Montage. It's and so you've got other sort of, I guess, strategic company or producing companies like Fortuna. They've made a huge investment into Côte d'Ivoire and Senegal. There is there is plenty of institutional financing coming into West Africa, and Côte d'Ivoire in particular.
Well, It almost sounds like I'm doing the same thing as smart money is doing, which would be a first for me. But it does sound like a good thing. What else, Andrew? What else am I forgetting to? I think we've been at it for probably almost an hour at this point. But what am I forgetting to ask you about Cote d'Ivoire? What's important that you want to relay?
I don't know. I mean we've really touched on most of the important things, and it in a nutshell, we like the framework, we like the people we work with. There is, I guess, I don't know. It's just a good. It is an excellent jurisdiction to be working in, and like I said, I've worked in multiple jurisdictions in West Africa, and Cote d'Ivoire, where it's come from, since 2010, 2012, it's astounding to see that level of growth and the change, in where it's been, and it. I can say this, it's this going the same way as Accra did. The first time I was in Accra was in actually 2000 and early 2000s, I think 2002. And the way I remember Accra as a city in 2002 and Accra as a city now is like it's mind-boggling, like the change in that 25 years. And Abidjan is no different, right? So I talk to people I wasn't in Abidjan 25 years ago, but I've got colleagues who were, and we talk about things in the same way. And so these are burgeoning economies, and that'll just keep growing. And yeah, it's good. It's really good.
Well, thank you so much for sitting down with me. I know we'll be following. I'll be following along with the story, so we'll be getting more updates as things move on. But yeah, thank you again so much for doing this.
Okay, no worries, Antonio. Really, always great to chat.